something important has shifted, and it did not start with rumors or social media chatter. It started quietly, inside official systems that usually move long before the public notices. What we are seeing now is not speculation heating up again, it is structure being put in place. For years, the Iraqi dinar revaluation was treated like a theory that never matured. Analysts debated it, critics dismissed it, and most observers assumed Iraq was nowhere near the level of stability required for such a move. That assumption is now being challenged by hard documentation, not opinions. A formal publication has appeared in the Iraqi Gazette, the country's legal record. This matters because anything published there is not commentary, it is enforceable policy. Unlike past claims, this document lays out how a currency exchange framework would function under defined legal conditions. What makes this different is the depth. This was not a brief announcement or a political statement. It was a detailed operational guide issued under the authority of the Central Bank of Iraq, outlining how a national currency transition would be handled step by step. The language of the document signals preparation, not exploration. It focuses on execution, compliance, sequencing, and controls. That alone moves the discussion from if toward how. At the core of the framework is a tiered rollout. Iraqi citizens are positioned first, followed by domestic institutions. Only after internal systems are tested and stabilized does the framework allow foreign participation to begin. This sequencing is designed to protect the local economy. It limits sudden capital pressure and allows authorities to observe how liquidity behaves before opening wider channels. That is a sign of cautious monetary management, not haste. Each tier comes with tighter verification requirements. Participants must meet defined compliance standards aligned with international norms. Documentation, identity verification, and traceability are built into the process from the start. One notable element is the emphasis on source verification. Larger transactions require deeper proof trails, including certified purchase records and banking confirmation. In some cases, digital transaction histories are also required. The framework also identifies a fixed list of approved exchange institutions. These include vetted partners outside Iraq, some with U.S.-based affiliations. That signals coordination beyond borders, not isolation. Another striking detail is the use of modern tracking methods. Transactions above specific thresholds require verification supported by blockchain-based systems. This is new territory for Iraq and reflects a push toward transparency and control. For dinar holders outside Iraq, this changes the landscape. The system now prioritizes readiness over waiting. Proof of ownership, documentation, and compliance preparation are no longer optional, they are foundational. Within hours of the publication, private advisory firms began shifting their guidance. The message moved from patience to preparation. Holders were urged to organize records, verify physical notes, and be ready for formal processes. There are also signs of early coordination with regional banks in the United States. Institutions in areas with higher concentrations of holders are reportedly being briefed on possible procedures. No dates have been announced, but structure often precedes timing. The ripple effects did not stop with the dinar. Shortly after the publication, the Vietnamese dong showed an unusual upward move against the US dollar. At the same time, activity around the Zimbabwean dollar increased in secondary markets. Individually, these moves might not mean much. Together, they suggest that markets are reassessing currencies long viewed as suppressed or disconnected. Analysts are beginning to treat them as part of a broader normalization story. International reactions have added weight to this shift. Former central bank advisors and global economists have pointed out that this level of procedural detail usually seen when systems are close to activation, not years away. Legally, the Gazette publication matters even more. It creates a reference point that can be cited in disputes, appeals, and compliance reviews. That protection did not exist before and changes the risk profile for participants. Looking ahead, Analysts are watching a series of operational phases. The early period focuses on internal readiness. Later stages may include limited institutional testing, followed by broader international access if systems perform as intended. Timelines remain flexible, but the structure is now visible. That alone changes behavior. When systems exist, preparation becomes rational rather than speculative. For individuals, the most practical step is self-audit. Inventory physical holdings, record serial numbers where possible, and secure documentation. These steps support verification and protect against delays. Equally important is organizing legal and financial records. Identification, proof of purchase, and address verification must be current. Incomplete documentation could push participants out of early access windows. Choosing an exchange path also matters. Banks, licensed brokers, and contract-based structures each carry different requirements. Understanding those differences early reduces risk later. Professional advice is no longer optional. Currency exchanges can carry tax consequences that depend on timing, intent, and jurisdiction. Poor reporting can create serious legal exposure. Periods like this also attract fraud. Any offer promising guaranteed access, special rates, or secret channels should raise concern. Legitimate systems do not operate through pressure or private invitations. The key change now is psychological as much as procedural. The Dinar narrative has moved from belief-driven discussion into rule-based reality. Waiting has been replaced by preparation. Whether outcomes meet optimistic expectations or not, one fact is clear. A formal, enforceable mechanism now exists. The conversation has changed, and the system is moving forward under defined authority. The question now is no longer when something might happen. It is whether you are ready to respond when it does.